Jonas Gross on the privacy of the digital euro. I hope you're all right, Jonas. Good morning.
Perfect. Good morning, Marcel. I'm here. I assume you can hear and hopefully also see me.
Perfectly fine.
Amazing. Great. Yeah. So first, thank you very much for the invitation. I'm really thrilled to be here and speak today. I will also now share my screen. So if you cannot see my screen now, just let me know. Otherwise, I assume it works. So yeah, as I said, thank you very much. I'm very happy to be here today. And my presentation kind of fits pretty well in the process, if you went, of the presentations by Manuel and Alex. So Alex, also thanks for the great hint and direction to my presentation. So I will today talk about the topic privacy of the digital euro, which is essential. Alex has already motivated it. But before I start with the content, I would very briefly like to present myself. For the people who do not know myself, I'm Jonas. I'm today basically here as a representative of the Digital Euro Association, and basically newly established think tank around digital money. And besides that, I'm working for the Frankfurt School Blockchain Center as a project manager. I'm also writing currently my dissertation about central bank digital currencies. So I'm addressing this topic from an economic mainly and academic perspective. And besides that, I'm, for example, also together with Alexander co-hosting our podcast, Bitcoin, Fiat, and Rock and Roll. Yeah, briefly about the Digital Euro Association, so that you get a feeling about it. I know that my colleague Valentin also, yesterday has basically written some information about it in the Telegram group, and will also do so in just a second. This is basically a think tank around digital money. So what we basically want to do is to kind of also shape and contribute to the debate about digital money, basically by providing a platform for researchers, by doing education, hosting webinars, etc., stuff like that. We focus on the digital euro, but here it's really important what we mean by that. We also heard this in the presentation by Manuel. So we both consider CBDCs, so the public form of the digital euro, and if you want, and also the private form of the digital euro, which is like the more blockchain related debate Manuel talked about, right? So with the Digital Euro Association, we basically do kind of both. And there are also ways for you, just as a last slide before I go into my content, is there are different ways to participate. So if you like to support basically the way in discussions about digital money as an individual, you can become a DIA expert or a DIA fellow on the left-hand side. So this basically means you can be engaged in our working groups. We will soon start. If you are an expert, so basically meaning that you have some pre-knowledge and also do research on CBDC and digital money, stable coins. And if you say, well, I'm interested in this topic, but I don't have any more deepen, if you want, knowledge, you can also become a DIA fellow and just basically follow our initiative and be also part of it, but not in the sense of like a contributing research. We also disseminate to our members via our social media channels. For companies, we also have ways to engage. There's the way of an active membership and supporting memberships. So maybe also to mention, for individuals, the participation is for free, and for companies, in the end, we charge a tiny fee to be part of our network in the end, and also to connect with our great community, which currently consists of more than 200 research fellows. So if this is interesting for anybody, I've basically included the QR codes here. You can also visit our website. And so it was just really important for me to present this initiative because we're quite new, and I think this is a really interesting and relevant topic. So I'm really welcoming everybody to contact us. Right, so let's now come to the topic of the debate today. And first, for me, it's really important to define what we are talking about, right? Because if today people talk about CBDC or the digital euro, very often, to be honest, things get mixed up. Because people basically mean different things with the digital euro, right? And for my presentation, I will focus on a digital euro as a central bank digital currency. So this is basically what Alexander explained and not what Manuel explained. So I also see a very urgent need for the private sector to be active here, but my presentation will focus on the CBDC, so the public side here. So I'm basically talking about the digital euro which could come in a few years by the ECB. And the second disclaimer in the beginning, I'm really talking about a technology agnostic digital euro. So very often in the debate, it's stated that a digital euro has to be based on DLT by definition, but this is just not wrong. not right, because a digital euro doesn't have to be based on DLT. It can be based on DLT. There are also good reasons to do so. We did also lots of research on this topic, but it's a task the central bank can do, but doesn't have to do. When we think about machine-to-machine payments, delivery versus payment for machines, for the industry, etc., what Manuel outlined, this is something the private sector can do as well, right? So when I talk about the digital euro, it can be based on DLT, but that doesn't have to be. And this is really important to be clear, because this often gets mixed up in the current debate about the digital euro. Yeah, I'm focusing on one particular aspect, and this is also something Alexander touched, and this is the aspect of privacy. So we have seen in the consultation, also Alexander already outlined on the digital euro, that basically individuals and also companies in the euro area demand privacy. So privacy was the most important featured, most demanded requirement the participants of the consultation basically mentioned, with 43%, I guess it was on average. So really, really a lot. And this means this is a topic now which is on the agenda and has to basically be considered, right? So this is really, for me, was the most important aspect of out of the consultation by the ECB. And I mean, when we talk to people and say, well, we need privacy, everybody says, well, yes, of course we do. And if we talk about privacy, kind of people seem to agree quite easily. However, I want to provide a few more arguments why privacy is indeed important, mainly stemming also from the literature on this topic. So privacy per se is, of course, first is kind of secured by civil rights. So if we think about the freedom of expression or the freedom of association, this basically also implies that you have some kind of privacy in the background. With privacy, also government scrutiny and surveillance abuses are prevented. Of course, I'm not saying that that governments currently do this. Of course, I mean it seems that we live in a kind of stable democracy and also with a stable government, of course. But we have also seen in the recent years that this can change quite easily, right? So if we have privacy, then surveillances cannot be established in this sense. And this also directly leads to the third aspect, that specific transactions cannot be prevented. So here again, this is something we see in the world, right? Maybe not in our countries, but if we think about developing and emerging economies, this aspect of censorship, of basically also a kind of forbidding transactions by specific ethnic group. We see this, right? And this is why privacy is really key also when it comes to payments. And the fourth aspect is probably the most important one, or a very important one for industrialized countries, is also that it protects users from data exploitation by the payment service providers. So we have seen in the recent years that there have been some lags when it, for example, comes to email providers or also social media networks, etc. And if this data are not like secured in a or stored in a way that it can be allocated to and assigned to a person, this means this data can do not harm if they are exploited for whatever reason. It can be on purpose, but also not, of course. And this is why privacy is really important. And when it comes to financial data, then the privacy is even more important because transactional data are confidential. I mean, I think everybody knows this from discussions. I mean, if you talk about money, it's very often a topic that is really sensitive, right? And why should we basically give access to many different players, institutions about our money balances in the end, right? So people can decide to do so, and this is fine if they they have preferences for that. I mean, I'm of course also using banking or also mobile applications. But I think, and this is also what Alexander said, is there should be a way for people to have fully private / anonymous transactions as a possibility. And today you can say, well, today we can do this with cash. And this is totally valid. Today, cash is really private. Only the sender and the recipient of a transaction knows what's going on, right? So it's the case today. But what we also see is that the use of cash continues to decline. We have some countries where cash is already marginalized, not in the euro area, but who knows what happens in 10, 20, 30, 40 years. Maybe cash is marginalized there as well, right? And everything happens in digital form. And then there should be a means of payment that is private by default, private by definition. And therefore, this is, from my perspective, something the CBDC could be, because this is what the public sector should provide. Because the private sector normally doesn't have incentives to basically provide a private form of money, because, I mean, the business models are targeting to identify people, right? To provide advertising, etc. So this is something what I think a CBDC should do. And therefore, this is also the reason why I think privacy is really important for a CBDC. So now I hope to convince you that privacy at least is of somehow of importance for a CBDC. But now the essential question is how to do this. Because first, if you think a bit digital currency, you think, well, in digital currency, money is stored in some kind of digital database, digital database or ledger, right? So this data are stored and some people can access it besides the sender and the recipient. So how can you do this in a private way? However, there are tools to do so. And this is something I want to present to you. And this is something actually we have been built. So for the last few years, a research team, including, for example, Alexander, myself, and a few colleagues from the Fraunhofer FIT, we have developed a prototype for a CBDC that provides cash-like privacy, but is also potentially regulatory compliant. And this is something which is really important, because if we think about private payments today in a digital world, there are privacy coins. There are Zcash, there are Monero. However, they currently completely operate outside the regulatory system, if you want. And what's quite nice with our solution in the end is that not just privacy is ensured by design, but also compliance. And how we do this, I will explain to you in the next few minutes. So to summarize our goal here, it's to ensure full cash-like data privacy for CBDC, but not for all CBDC transactions, to also kind of limit potentially at least illicit activities, but just to a specific threshold. So assume there is a specific threshold, and if a person wants to transact below this threshold, the person can do this anonymous or privately. And if this threshold is exceeded, some kind of KYC has to be conducted. And this is a system we kind of see today. So we see for cash. For example, in Germany, you can do private transactions with cash until 10,000 euros. Afterwards, you have to do KYC. And this is also we currently see with e-money, where the threshold is definitely lower. It's 150 euro a month for anonymous payments. And what we basically now would suggest is to use such a mechanism to use a threshold, not just for cash and for e-money, but also for a CBDC. But how can we ensure privacy? And this is not that easy, because we said that we want to have privacy where also a bank and a central bank cannot access transaction details. So we want cash-like privacy where only the sender and the recipient can access transaction data. And this is something cryptography in the end has to do, because if banks and central banks do not have access to data, how should they ensure that somebody is compliant and also private, right? And what we in particular use is so-called zero-knowledge proofs, as some of you know. So basically cryptographic proofs that are currently also a lot used in the DLT context, but it doesn't have to use a DLT. So we, for example, use a centralized ledger in this research project. And we also implement so-called user-centric compliance. And I think this is quite nice, because we don't have institutions that can access transaction details. So the central bank or also banks cannot do compliance checks by their own. Therefore, the users have to prove that they are compliant. And this is kind of, I think, an interesting shift to get the compliance from institutions back to the user. So for our payment system, it's the case that the user has basically to prove that he's compliant. So he has to send a zero-knowledge proof proving that he's compliant. And only if he proves this, or he or she can can instruct a transaction, right? So this means our system is really compliant by default, because clients have to prove that they are compliant, and it's also private by default, because we do not store personal data. We only store some hashes. I will not go into detail here, but for outside party, it cannot be inferred which user it is. But also not who is behind this. And this is really the key of our prototype. Before I conclude, to give you some feeling about our system, we have two different CBDC payment rails, if you want. So I already talked about this threshold or the limit. So if a specific limit is exceeded, then transactions are conducted transparently with KYC. And if there is it's below the limit, transactions can be conducted completely private. And this is the privacy pool on the left-hand side, and also the focus of our project. And what we basically see here is a person does not have to identify itself. So there is just limited KYC, right? But what we have to do is we have to ensure that every user can only open up one account. Because if a user can open up more than one account, this limit doesn't make any sense anymore. Because if you open 1,000 accounts with a specific limit, then you do not restrict it for illicit activities in the end, right? We do this via digital identities. However, one could also do this with some DLT or also a centralized ledger where the central bank says who has already entered this so-called privacy pool. But this is just the solution we described. When it comes to privacy, we have to differentiate between privacy towards the central bank and the payment service provider, which is a bank we include in our prototype. When it comes to the central bank only knows the total amount of CBDC, so the CBDC money supply. The payment service provider knows more. The same payment service provider knows with how much money the client entered the pool and with how much money the client basically withdraw from the pool. So for the on and off ramp, the payment service provider is important and knows what's going on. However, it doesn't know more. So when I enter the pool with, for example, 100 euro, my payment service provider knows this. But if I, for example, send a transaction to Alexander, then the party does not know this. So the bank does not know what's happening inside the pool. And this is really crucial because we ensure this via zero knowledge proofs. And this is exactly how we can ensure this cash-like privacy, even if a digital world with this very innovative cryptographic tools. The transparent CBDC accounts on the right-hand side, we are a little bit more agnostic. This was also not the focus of our project. So we currently see lots of debates going on. Should there be banks involved? How to settle it? Will there be a limit, etc.? And we did not impose strong assumptions here. We are basically quite agnostic when it comes to the transparent CBDC accounts. For us, it's just important that there is a reconciliation process between the privacy pool and the transparent CBDC accounts, so that these two sides actually, if you want, speak to each other, right? So if, for example, a payment is above the threshold, then our app should automatically say, do you want to transact now transparently as your limit is exceeded? And you want to say yes, and then this transaction should be conducted, right? So this reconciliation is important, but we are also, as I said, quite agnostic when it comes to concrete implementing this transparent CBDC accounts, which is also heavily debated currently. Yeah, so this was basically the concept I wanted to show you in the end. We are currently writing a paper. We have also presented this prototype to lots of central banks and academics, also to get some feedback. We are currently writing a paper about it. So if you're interested in that, just follow me on ResearchGate. I will publish it there as well. Or of course, also via my or also our social media channel of the team, for example, Alexander and myself. And we will might release it hopefully in July to give you a first feeling how this implementation works. So to conclude, privacy is essential for a CBDC. The users demand it. And I think there is also a good reason for people to have a right for private payments, also in a world where cash, at least when we look in the future. So of course, central banks do not want to abolish cash. This is really important to stress. But if there is a market process driving out cash, as for example in Sweden and in China, then of course this could also mean that we see a similar process, maybe with a delay of a few decades as well. We developed a concrete prototype how to do this. So as I said, this is not just a slides or a proof of concept. We really implemented it, at least the first, the basic features. It's of course not a great user-friendly, convenient app, but we have showcased that it's possible what we want to do. And also our feedback was quite positive. And if you're interested more about it, we will publish a research report soon, and we'll also talk about this in our podcast. Good. That was actually from my side. Thank you very much for the attention. I think I was a little bit shorter than I should, which is fine because now we are back on the schedule. So thanks for having me. Also, thanks for the great moderation, Marcel. And thank you very much.
Thank you, Jonas, for the great presentation. I'm personally enlightened on some aspects. If you have the time to very briefly answer questions, or one question, I think, from the time, that would be great.
Sure, of course.
Great. I have the question here, who and how should compliance rules be defined? Be a little brief on that, please.
Yeah, okay, I will be brief. So we basically define compliance just when it comes to anti-money laundering and counter-terrorist financing. So we do not talk about every aspect of compliance. And we particularly establish a limit. So for example, this could be 1,000 euro or more. And if this limit is exceeded, then it cannot be done transparently. But we focus really on this KYC, AML, the CFT perspective here, to be very brief.
Great. Thank you very much, Jonas.